Hello again, everybody. This is Harry Boxer, the Technical Trader, and thanks for being with us. My pleasure being here, of course. And today I'm going to show you a bit of what I do every day. I wrote a book called Profitable Day in Swing Trading. That's the title of our presentation. Basically, I believe in using price volume surges and pattern recognition to catch big moves in the stock market. And that goes for intraday trading using 1-minute charts, which I do every day. I have a room with several hundred people, over 500 actually, in the room right now. People who are very astute and bright traders with great ideas that's to share with the room. But more importantly, it's a place where I think it's a community where people feel extremely comfortable. Today, I'm going to show you some of my techniques about how to go about trading the way we trade in our room. In front of me, we have some charts from today. I just want to start off the day. But before I do that, I want to explain what I do every morning. I come in the morning at before 4 a.m. in Los Angeles, where I live. I'm on the site for over an hour, running through charts, hundreds of them, looking for stocks that are getting price volume surges and spiking or moving up in the morning at heavy volume. And I'm looking for at least 5 to 10 times normal volume pre-market, something like what you see here at AMST that this morning popped. This is during the session. That's not a really good example of something that was moving pre-market. MEDS was right in the morning from get-go. The stock is surged, pulled back, and then right in here where it formed a little consolidation, we were a go. That was right at the opening. You can see the stock at 9:30 was 632, and within minutes traded at 720, about 90-cent pop, and then it formed a perfect bull wedge. And when it broke through that level, we put in another day trade, and the stock went ballistic. And you can see at one point from where we first entered it in the low sixes, the stock reached 10.25 or 1082, excuse me, almost 5 points. And that took 2 hours, at which point we put a stop in right there. We were stopped out right there. You can see what happened the rest of the day. But my point is in the morning, I come in, I'm looking for stocks that are gapping, stocks that are running, stocks that are surging, stocks that are being triggered by something. The only time I look at news, because I'm a pure technical analyst, and I have doing this, folks, over 50 years. My website's been around for 20, and I've been trading since I'm a kid. I'm 74 right now, and I've been doing this a long time. If you read my book, Profitable Day in Swing Trading, it explains my techniques. It's all about price and volume recognition each day. We look for certain patterns, pennants, coils, flags, consolidation patterns, which indicate, for example, in this case, a stock that is popping, running, and consolidating and setting up for the next leg up. I consider this a bull flag right there. Look at the low volume on it. And just before the big volume came in, it was very quiet near the VWAP right there. That dotted line is the volume weighted average price. Normally when a stock holds that, it'll pop. This one popped, pulled back, popped again, and pulled back, and there was several chances to trade it. But more importantly, when it blew through the triple top, this is, again, just from this morning. But I want to explain to you, since we have an hour, about what I do in depth. Basically, one way to find the candidates is to analyze patterns from the previous day and see how stocks close. And a lot of times they'll close strongly and spill over the next morning. My morning routine basically consists of looking for those stocks that are gapping and running, as we said. And a lot of times I'm looking for certain patterns. I want to see stocks that are breaking out across ranges through resistance, stocks that are maybe gapping up and through a key overhead resistance level, moving averages, declining tops line, something like that, that shows a reversal in trend. Now, oftentimes when we get a reversal in trend early in the day, it may trigger a long intraday move, which in turn could trigger a swing trade, which in turn could sometimes trigger a much longer multi-week trend, or maybe even multi-month trend. Basically, I want to show you some ideas about charts that we're looking for. The kind of patterns we look for are normally would be pennants, coils, triangles, things like that. Here's a big breakaway gap on this one. You can see the pop and the wedge, and then a long coil. We first entered it when this volume came in, strong volume on the breakout, right there at about 35. And within an hour, the stock was 36 and a half. It went sideways for about a good hour and a half, and then broke out and it surged 38 plus. So from an entry arena 35, we got 3-point trade that day. And you can see what I look for. I look for patterns that are consolidating, trending, etc. That's just one example. Another one is ZHNE zone. This is a really unique one too. You can see the huge gap on this one, literally going from 4, opening at about 450 and running quickly at about 490. And then a beautiful wedge formed. Oftentimes when I see a wedge, we buy the breakout. And it was a beautiful mini 1, 2, 3, 4, 5-wave move before another consolidation flag set in. Now, if you draw lines across these lines, you can see how the rising channel was starting to form. This broke out, formed a coil, and then formed a mini 5-wave move and formed another coil, and then a really micro 5-wave move that went all the way up to 575 from where we first entered at 475 for a nice $1 day trade. And at no time during that day trade did this stock break a rising parallel channel. Now back to some more examples from today because I want to kind of intermingle that. Here we go. So again, this was the trade today on meds, which was a fantastic trade. Even though the stock had already run, even though the stock had already run, let me get back to meds for a minute. That's interesting. 1 second. Cut down right there in the middle of the presentation from TC2000. Love the service, folks. Been doing it for 30 years. I'm a preferred member of TC2000. A preferred trader, actually. Take a look one more time. When a stock surges, and very few people see a stock go from 4 to 6.25 and will consider trading it. I love momentum. To me, it was just starting. It had a mini 1, 2, 3, 4, 5-wave Elliott wave move, and then went into another wave. This is wave 1 and 2. This is 3 and 4. This is the 5th wave, which consists of 1, 2, 3, 4, 5. I told everyone to sell this stock across 10. And I said, if you're not selling it, you put a stop under 8.75. You can see the stock went back to 6.25 by in early after hours. So the way I protect people is I come on nonstop all day doing. And by the way, with the webinar I put up in the morning is a focus webinar, which means the following: I do an hour of research. I come on with my members at about an hour and 15 minutes before the opening. I go over all the stocks that I've gathered as what we call a watch list or a focus list. And those patterns will then reveal themselves in pre-market. But I don't put any day trades out until I see the market open. And I see which one of those stocks might be trending beautifully or forming the kind of patterns we want to see with the kind of volume patterns we want to see as well. Now, this was a pre-market take because this was, you can see 4 p.m. last night. That was last night, and this was in the morning. And then it formed a pre-market bull flag. And when the market opened, it popped and pulled back, but it held support. That's the key, folks. When you see early pops, are they going to hold support? Here's 1, 2, 3 times it held support. Then it ran up to resistance and backed and filled and formed a rising wedge. Just a perfect example of a 45-degree angle rising channel that held support all the way up until it broke. And there was actually the break right there. I actually told my people to put a stop underneath the first pullback low here at about 940. Half there and half under 8.5. You would have been stopped out with an average of around 8.75. Nevertheless, or even closer to 9. Eventually the stock dwindled down. That's one example from today. Another one, and a perfect example, is Graybug Vision. By the way, biotechs had a big day today. A lot of the junior biotechs ran like this. And here's a stock with a tight coil going nowhere all day until 2:15. And suddenly this occurred. Pop and a little coil. Notice that in this formation, the volume almost dissipated to nothing. That's what we call the low volume ebb. Just like when a tide goes out and just before it comes back in, it stalls for a minute. That's what happens in stock trading. There's a meeting between or a balance between buyers and sellers. and the stock will form a mini coil or flag here. Usually the volume at the apex becomes very, very narrow and quiet. A precursor usually to move. So as soon as it popped here this morning, we were all over this one above 5. From 5, it went to 555 for 10%, pulled back and held support at the previous high, and then ran up again and did a 5-wave move up before forming a big coil. We watched it carefully, and when it started to move again and break out right there, was another buy signal at 550. From 550, it went to 650 and formed another coil, but held the prior high. In technical analysis, prior highs become support when broken. Notice the test, unable to break down below it. It broke back out again. And when it ran up and pulled back, it formed a little flag and broke out again. It formed a coil and broke out again. The perfect chart, actually. The lines are drawn wrong in this one. This is your actual channel. And you can see that in no time during the day did this break the channel. And notice these two tops here. Test 1, test 2, test 3. When it's not breaking down, it's going to break out. And here's a move that took place initially from 5 and made it up to 880 by the end of the day, 885 before it backed off a little bit. But a perfect example of how we day trade, we find stocks that are thrusting on volume, notice the volume change, and then forming some consolidation before it advances. A lot of times people will buy the first breakout. If it pulls back successfully and breaks out again, add to your position. Folks, I'm going to leave you. If you leave here with only one thing, this is the way to do it. Do not average down ever. You average up. If you see a stock that pops and breaks out, then you want to pull back. And when it breaks out again, you buy some more. And here you buy some more. And here you buy some more. There's no reason to sell a stock until it reaches your target. Now, yes, my targets were here and there. But if you're in the stock and it doesn't break support, you can always let it keep going. The way to, and the number one question I get from my traders, how do I stay in the stock? I always sell it too soon. Does this sound familiar? It's because you don't continue to raise your stops. At all time, you have to be continuing to have patterns like that. When you're in a day trader's dream, this is what I call this. It's a stock that never breaks support. Didn't break there, didn't break there, didn't break there, or there, until finally, actually right now it still hasn't broken support. So for me, I look for these patterns every day. Today we had several of them. AMST in the morning, popped with a wedge and broke out. We put a day trade on it. At about 260, the damn thing went to 446 and it didn't take a half an hour. Well, what a move. And then along the way, it did 1, 2, 3, 4, 5, Elliott wave. The fifth wave, when you see a fifth wave move, it comes with a big spike in volume and it gets to a target zone. No brainer, sell it. Who cares how high it goes? If you bought it here and it went up to there, take the profit, nail it down, walk away. Look what happened to it after. Yeah, it broke out again later, but you had to suffer through a few hours of agony. AXLA, another example. Look at the pop, and this didn't take place till, look, the stock did nothing all morning until 11:30. Suddenly, one bar pop. Took it from 348 to 389 on 78,000. Doesn't sound like a lot, but this is a thinly traded biotech stock. Here's another biotech that ran today. 1, 2, 3, 4, 5. Most of us sold it up here at 490. That was my fifth wave target. It then came down and went boom, boom, boom. So, if you were still in it, which means basically here's my theory. You sell a third, and a third. That's the way you scale in, you scale out. Never put all your money in at one time. If you took a third when you bought a third, and you bought another third, you could have bought another third and sold on the spike up. That's my theory, is that stocks will consolidate, they'll trend, they'll thrust with volume, and they'll move in certain wave patterns. This is a beauty. Basically, that's your intermediate day trade. Your intraday day trade channel. GBS is a perfect example. In the morning, it did nothing, but I was watching it. I saw a little pop and flag right there. I was intrigued. Another pop. That's where we went for a third of a position. Here, another third. Never got a chance really to get to the third because it just went ballistic. So we sold it. I think most of us sold at about 3.75 to 3.90 in that range. It reached 4.13 actually, and then pulled down from the little rounding bottom. There's your breakout. And look at that thrust. 350 to 469, almost vertically. And guess what? At the end of the day, it's still in a bull coil. Now, this is the kind of stock I'm watching for tomorrow because momentum and the way this closed, and if you look at the daily chart, a massive breakout across a multi-month declining tops line with huge volume in the breakout. Now, the signal was 2 days ago when it popped with a gap, and then it came down and tried to fill that gap, couldn't do it, reversed today. My target on this one, 5.75. At least near term, because there's lows and highs in that area, that's resistance. So you always got to coordinate your daily charts with your intraday charts to make sure you're not running up against some overhead resistance. But that's really a beauty today. ANY is another. Now, I was watching this pattern and I basically told my people that this line, if it got broken with any kind of volume, was a buy signal. Right there's where we bought it, about 270. It quickly ran to about 3.25. Pulled back and severely tested support, but held it, and then stepped up its way higher in a 5-wave advance. And by the way, this is a 1, 2, 3, 4, 5-wave L8 wave pop and a 3-wave corrective L8 wave. This is almost perfect. 1, 2, 3, 4, 5 waves up again. That was where we sold it, 350. Got up a little higher, 370, and pulled back down again. But you know, L8 waves moving 5 waves up, 3 waves down, and this is exactly what happened. Now here was a 1, 2, 3 wave correction. At that time, it looked like it's a buy signal right there, but it popped and immediately failed. So that would have been a failed trade, but at least you were protected with stops. Folks, in my room, I give 2-day trade targets, target number 1, target number 2, on every trade when I enter the trade. I tell you where to stop it. I tell you where support and resistance is. And then I'm on quite often during the day. Let's put it this way. When once trading starts within 10 or 15 minutes, I'm back on to show you the early patterns. I go over which look the strongest. I issue buy alerts. I'm usually on an hour to anywhere between 45 minutes and an hour and 20 minutes in the beginning, because those are the most important. That's the most important time frame for me. You make most of your money in the first 90 minutes, in my opinion. And then you may make some money in the last 90 minutes. And there's a lot of choppiness in between. But for me, the biggest day trades we make are in the morning. But if they're trending, just like I keep telling you, raise your stops. Where would have been a breakdown on this one? Take a look. Perfect rising channel. It broke right there. It snapped right back to it and failed. That's called a kissback. The actual channel, as a technical analyst, I can tell you that was your rising channel. It broke down and snapped back and fell and then rolled over. If you didn't stop it there, you needed to have stopped it there. Either way, it didn't do much after that. Interesting play today. In the middle of the day at about 1:30, I saw this make a run and it pulled back and formed a wedge. And I told everybody it's a day trade. Now it popped there and we put a trade on it. Pulled back a little bit and then popped and then back again and tested again and again. And finally, by the end of the day, after hours actually, look at that run. 19.75 to 26 just after hours today. That's how crazy some of these biotech stocks are getting right now. Heat Biologics, another one. So at 1 o'clock, out of nowhere, the stock popped and formed a little, what I call tight ascending bull coil, or maybe a mini pennant. Either way, it looks like a flag to me. Okay, there's your pop. There's a strong run up and a beautiful little mini wedge. And there's a big breakout. Look what it did after this breakout. 767 to 948, about $1.80, and I don't think it took 12, 15 minutes. Beautiful trade. Then it went to a big coil. What did it do when it broke out of that coil? Vertical. This move, which began basically around there, 880, got to 1080. So guys in my room made a trade there, and there on 3 different signals during the intraday pattern. I want to show you something that sometimes it pays off. The one thing about me, folks, I'm on all the time. I love my job. I love making money for people. I love teaching. I come on 6 to 8 times during the day. I do a complete review of all the stocks we're trading and some that we're not. But I'm also on after hours often if I see a few runners. Like look at this right after hours. PGEN, which closed about just under 7 in 3 minutes, went to 910 in 3 minutes. Then it pulled back and pulled back again and held it right there. For me, a key for trading, and started to run. So some of the guys in the room bought the stock at 835. And it was choppy, but it made it to 971 for another $1.35 there. And then it broke here and it coiled. So what is this? This is a setup for tomorrow. The daily chart shows this. There's some key resistance there, which may have caused the stock to back off right there. Where's my next target? I could see $11 on it tomorrow. Maybe more than that. Pretty intriguing pattern. Here's another good one from today. SCNS. This morning, just sitting there, really quiet, and suddenly this occurred. Let me show it to you. Suddenly that occurred. So I said, look, we're going to buy the first pullback because this looks like a real thrust. Look at the volume down here. There's your pullback. 3 1/4. 3 3/4. We had a target there. See that line? That was my target, 375. The actual high, 375 to the penny. And then a 1, 2, 3, 4, and a big wave falling wedge, and then a little inverse head and shoulders. A breakout late in the day, and then this happened. Sideways for a couple hours, breakout and run after hours. This is after hours. But sometimes you get the kind of pop, and the first little pullback is often the best trade. Urendai was really a thinly traded pre-market stock. But when the market opened, it popped and pulled back and then formed a wedge. I said to my traders this morning that if this gets above the 480 area, I want to go long. I didn't realize it would go that fast. But from 480 to 583, $1, and I mean, looks like about 10 minutes, if that. And then it pulled back right to support, and then another pop. And when it formed this little wedge in here, I said, if it breaks out here, it's a buy. And so some of us jumped in at 545, and it was quickly 6 or 599 for 55 cents. Then it broke down. But we don't stay long, folks. That's the one thing about day trading. You're in, you're out. That's example, and here's another one, HTBX. Oh yeah, we showed you that. Yeah, so this is an example of the kinds of stocks that we look for every day. From today, just to show you that my methods and theories and type of trades and patterns we look for exist every day. I have a theory that stocks are like buses. Every 10 minutes, another one comes along. Seriously, folks, every 10 minutes. So if you miss a day, no big deal. Everyone has the fear of missing out. Check out this example. Quite unusual. For a stock to pop and pull right back and then form a little coil. So when I saw that, I said, let's wait for a pop and breakout. Well, the stock broke out right there at 21. Formed a little wedge, a little flag, and a little pennant, but kept rising and then went vertical. So from where we got in at under 21, I think it was 2090, it got up to 25.16. That was a nice, quick 2-hour trade. And then look at the end of the day, the stock went sideways and coiled. What would that be? That would be a setup for the next day. Now, as I mentioned before, stocks tend to move in 5 waves. That's basic Elliott wave stuff. I'll show you some examples. Here's a pop from the opening, right here, right at there. Popped at the opening. Formed a little wedge, broke out. Couldn't get through the high, backed off and tested one more time, and then ripped from 915 to about 1070. Nice trade. Then it went to a 1, 2, 3, 4, 5 wave, perfect coil within a wave, meaning this is a 1, 2, 3, 4. The 4th wave consisted of 5 mini waves, and then the breakout, which took it from 1030 to 1145. 2 nice trades. But by the midday at lunch hour, it had gone 1, 2, 3, 4, 5. And 5 wave moves always occur. If they occur in the mornings, and they peak by midday, I always sell. Why? Well, if you talk to any sophisticated trader or even my institutional clients who have a very sophisticated traders trading the trading desk, they all tell me the same thing. If I get a big move and it's lunch hour, I'm taking my profits off the table. And that happens so often, it's amazing, if not all the time. And you can see what it did the rest of the day after a beautiful five-way move. It took it from 8.25 to 11.40, a nice big move. It did nothing the rest of the day. So that's the kind of thing we see a lot when we're looking for day trades. Here's another five-way move, and a beauty, and a huge one. And I'll show you a waves within waves again. Here's an opening surge breakaway gap, literally from 35 to 36.5, and then a run to 37 and a quarter. And then a beautiful little coil with a low volume ebb right near the apex right there. It popped but couldn't get through and backed off. We see that a lot. There's your breakout. Price volume surge breakout occurred around 37.40, and in a very short period of time was 39 and a quarter. And then it did a flag, a little wedge, and stepped its way up. But what occurred here? This is wave 1 and 2, and this is 3 and 4. And the fifth wave had 5 waves. 1, 2, 3, 4, 5. My target was 40.5 3/4. It is exactly that level from 37 and a quarter. So we got about a 3-point trade on it. Nice day trade. But an example of Elliott wave movement, 1, 2, 3, 4, and then 1, 2, 3, 4, 5. That's called the fifth of a fifth. Basically, folks, I'm going to just jump back to the beginning. Analyzing early trend development is key. You got to develop a disciplined, organized, and focused approach. That's what I do for you every morning at TradeOutLoud.com. If you come to my site and you can come in for free for 10 days, no credit card, just sign up and check out all my services. People tell me to make enough money in the first couple of weeks to pay for 2 years worth of service. That's how reasonable I am in terms of what I charge. But what I do is I come up with a focus list for everybody, and then we go over it. And then we monitor the early price volume action closely. Now, there's something that Wharton Brothers has come up with called volume buzz. Nobody has it but them. They basically have taken their computers and analyzed early volume all day, anytime during the day. What that does is it takes the average volume over the last 100 days at that moment in time. For example, the market opens 9:30 in New York. At 9:45, it'll tell you at 9:45 what was the average volume of the last 100 days, and how does that compare to today's volume? Well, you may get 500, 1,000, 10,000% increase. That'll tell me something. By doing all of that, I create my focus list. This is what volume buzz is, again, just so you can see it. It's pretty cool, and it's very useful in trading. Now, what's my favorite pattern? I've shown you a lot of charts already, and almost all of them have this intraday rising parallel channel that go from that corner to the upper corner, a 45-degree angle. Maybe it's a little less, maybe a little more, but the bottom line is if you're in a rising channel, you want that channel to hold all day. All you have to do is keep raising your stops and go cha-ching, cha-ching. I have 2 professional golfers in my site who tell me that they come in every morning. They pick out 2 or 3 stocks that I've given them. They put in their price targets and their stops, and they go in the driving range. Or they play a round of golf. And by the 6th hole, or after about an hour on the driving range, they'll check their cell phones, and they'll see how much they're up. And I said to them, that's cool, but it takes all the fun out of trading. And you know what their answer was? Yeah, but it takes all the emotion out. And that's pretty cool, too. You make money while you're playing golf. That's just a story I like to tell because it's something they do consistently. It's pretty amazing, just based on my recommendations every day. So the intraday rising parallel channel we talked about, and I've shown you lots of examples of. And here's another example if and when it comes up. Any moment now. There it is. What I like about this one, it's almost a perfect chart. Here's why. When a stock pops and coils and pops and coils and pops and flags and pops and coils, I mean, look at the angle. You draw a line across your lows, you've never broken support. All you got to do is set your stop under there, under there, under there, under there, and you keep raising your stops until at the end of the day, you got the high for the day, you're out. And this one went from 20 to 24. Nice 20% day trade without any effort. And believe me when I tell you, I'm not cherry picking this chart. I got hundreds of them every day. I showed you 8 or 10 examples just from today alone. You come to TechTrader.com and yours truly will do all the work for you. All you got to do is press the buttons. I can't do that for you. And don't ask me, is this a good time to buy? I tell you what to buy. I tell you what support resistance is, and I tell you what the targets are. If that's not enough, then you shouldn't be trading stocks. All right, anyway. So, I wanted to show you examples of what I call the low volume ebb, because stocks will always get to that point just before they move. Now, here's an early, really big pop, and within a few minutes, it got very quiet and had very low volume there. And then it exploded. And then it went 3 hours in coil. Look how quiet it was getting. Tight little bars, no volume trading. That's the low volume ebb right there. Suddenly, one bar shows up, the volume picks up a little, it starts to move, it breaks out, and it runs. And this ran from 8 3/4 to 12 1/4 in literally a half an hour. That's the kind of trades we want to see. And by the way, at the end of the day, it coiled and was a good setup for the next day. So this is the kind of stock I put on my watch list for the next session. Interesting chart I want to show you on Regato. Very similar, isn't it? But these happen every day. It's pretty amazing. Coming into my room and finding these stocks, it's a lot of fun. Pop, coil, pop, flag, another flag. At the end of the day, it spiked this 855 from where we first went in at 5 3/4 for a 50% trade, 5-0, not 15. Never broke support. Never broke there, or anytime. Not even there. Now, on daily charts, even on intraday charts, but mostly on daily charts, I use a 50-day moving average crossover. I have 3 moving average. People are going to ask me this question later, so I might as well tell you now. These are my moving averages. And right now in the chart, I think there's only, there's only 2. I used to use 10, 21, and 50. Right now, I'm just using the 21 and 50 with the VWAP, the volume weighted average price. Usually when you see a stock pop and then the moving averages crossover right there, you see them crossing over right there? That's a buy. The first pullback after the crossover is usually a buy. Well, sure enough, this one went from 767 to you-know-where, 11. This is just example after example of moving average crossovers. But what I wanted to show you one second. Yes, moving average crossovers on daily charts are very powerful and can be used for swing and long-term trades. Here's a chart on Micron that I saved from years ago because I was watching Micron build a nice base, and when it broke out of the base right there, we bought it at 7 1/4. Then it flagged, it broke out. We bought some more at 8 1/4. Then it popped and wedged and broke out. We bought some more at 10. I'm not kidding. Multiple waves up, it kept going. There's another consolidation, another one. But what's unique to this? This is the breakout. This is your 50-day, your 50-day, and your 50-day. And what's really intriguing, there's a book out there that I recommend you read called Monster Stocks by John Boyk, B-O-I-K. He went through, and I don't know where he got his information, but over the last 100 years, he looked at the biggest winners of every decade, and he got information on which funds were buying where. And it turns out that most of them were buying when a trend was established, and then when they pulled back like this towards the 50-day moving average, and they would buy it bounce off the 50, there, or there. And in this case, where we first started buying it at 7, this thing went to 24 in about 8 months. But later on, it went to 40. It was a 6-fold increase. And it all started with the moving average crossovers. A couple more examples. JK Solar. A little bit different. but you can see that, you can't see the fire back, but there was a base there, a breakout, and a big retest. And then it started to channel. Look at that perfect channel. Each time coming near to 50, 50, 50. It also handled price support and channel bottom support. So it held near the 50 and the channel bottom, and there it again there. And finally, the no longer existing Panda, which I think was acquired. Broke out there from the wedge, broke out with a breakaway gap from the flag, broke out again and ran up and wedged and then popped and wedged and held support and ran up and held support and ran up and flagged. Interesting how we first found this one at 11, but we didn't buy it till it was 14. And 6 months later, it was 32. And about another few months after that, it was 45. Examples of daily charts. And yes, I do swing and long-term plays. But let's put it this way. I give you day trades, I give you swing trades. Whether you hold them longer or not is up to you. Usually, if you ask me, I'll tell you what I think, whether they should be held. And then there's moving average crossovers, which can be really powerful type moves. I'll show you some examples. And again, these are daily charts. Long base pattern, there's a breakout. Price volume surge. Popped and flagged. Stair up its way higher. Beautiful wedge, flag, wedge. By the end of this trend, this thing was in the 30s, and where we first spotted it at 4. And the example was that right there is where the moving averages crossed over. All three of them, 10, 21, and 50. At that point, the stock had already popped and it's formed a little wedge, but it hadn't broken out yet. True breakout came there. Look at that move after. And we see this so often, that the moving average crossover as a buy signal. Another good example, Arrowhead, the biotech firm. A big base formed. It broke out there. It confirmed there. This broke out of the base. This broke across resistance. Then a beautiful wedge formed. Then it popped and flagged. Then it popped and wedged. And it had a big wedge. And eventually, the Arrowhead made it into the 70s. That was years later. But when we first spotted it, it was a $2 stock. Just an example of some of the stuff we look for. And here's a really unique example, folks. I believe this is the one that moving average crossover. Yeah, look at that base. Pop wedge, perfect wedge. When I see a breakaway gap out of a base and then a wedge forms and a low volume ebb, first pullback right there is a buy. At $5, it was a buy signal. It went to 15, and eventually went to 30 from 5, 6-fold increase. It didn't take 6 months. The key to all trades like that. Now here's a beautiful example of a moving average crossover there that led to a 1, 2, 3, 4, 5 wave 1, a 3-wave corrective wave 2. Here's wave 3 and 4 and wave 5. The 5th wave reversed suddenly and became a 1, 2, 3, 4, 5 wave down move. Perfect example of 5 waves up and 5 waves down. Buy signals at the moving average crossover there, sell signal at the moving average crossover there. And not only that, but it formed a wedge right at that level and rolled over and died. This eventually got down into the 30s from 56, where we first spotted it and put it out as a short at 70. And yes, folks, I do issue shorts. My nickname is Box of Shorts. I'm pretty good at that. I have a list, and I also have a short swing service. If you're interested just on the short side, you can buy my short swing service. You can buy my long swing service if you just want to do long swings. There's also an all access service that gives you everything. My trading room, my minute-by-minute analysis, my day trades, and my swing trades, along with nightly videos called Charts of the Day, and a weekend webinar, which is priceless, folks. I spent 4 hours creating this webinar. I go over thousands of charts. I come up with about 125 longs and about 30 shorts every weekend. I show you the indices, every one of them, or the main ones, the oscillators, the VIX. I go over the main ETFs that I follow, the SMH for semiconductors, the FAS for financials, and the LABU for biotech. I also go over gold, silver, oil, etc. So it's chock full of information, folks, worth the price of admission right there alone, every Saturday morning. So it's chock full of information for a very reasonable price. I'll show you the price list a little later. So let's go on. And another example of a buy signal up and a buy signal down. Here's a 1, 2, 3, 4, 5-way move up and a massive move down. Now, when this broke down here and from the rising wedge and the moving average had crossed over right there, that's where I put a short on it at 41. It dropped down to 17 and eventually went down to single digits. And you can see the moves down. Wedge, wedge, flag, rising wedge, flag. It's just, when stocks are bearish, they're bearish. When they're bullish, they're bullish. The trend is your friend. Here's some real beauties. I want to show you this 1 minute intraday chart, which we use, and just use moving averages. Here's an example of a stock that popped early on, DQ, the Chinese semiconductor stock. At that time, it was trading at 19. It popped and flagged. And when it broke out, we put a day trade on at 21.5. It went pop, pop, pop. And look at the 1, 2, 3, 4, 5 waves there. So that was 5 Elliott waves. A lot of us sold it at 28, but we got in at 22.5. And then it consolidated in a rising wedge and broke out there. So a lot of us went back in at 28.5. Guess what it did? 1, 2, 3, 4, 5. 5 waves, Elliott wave. And then the consolidation. But if you follow just the waves and watch the moving average cross over, you're going to make a lot of money. A lot of money. Another example is Solar City, which was acquired, I should say, reacquired by Tesla, Elon Musk. So it popped and broke out, had a falling wedge. I love falling wedges. When they break out, they're often very powerful. This stock went from 49.5 to 50.5, coiled, broke out to 51, formed another coil, and eventually went to 52.25. Now, a lot of big trade, but about 3 points. More importantly, though, the moving average crossovers are there, and the parallel channel was intact all afternoon. And from this breakout point, 1, 2, 3, 4, 5 waves, no brainer sell. So one of the things that I want to point out is in technical analysis, drawing lines and using your angles and channels, support resistance lines, very important to have those on your charts. When Mike Thompson of TC2000 saw my lines in a presentation I did for TC2000, he was saying, where are these lines coming from? And when I explained it to him, he said, no, he doesn't even look at a chart unless he draws his lines first. So, but you've got to review and adjust those lines intraday because the angles change all the time. Here's another couple examples of perfect parallel rising channels. Now this is on a daily chart. The beauty of this was it had a beautiful base, a breakaway gap. It popped and formed the coil, popped and formed another one, and popped again. And it pulled back on a flag, held the trend line, ran up and wedged, ran up again, got up to 60, and was taken out at 80 or something like that on a takeover. But we spotted on the first pop and the first flag at 17. So it tripled. And I don't think it took 4 months. But it's a perfect example of rising parallel channel on a daily chart. You see daily right there. The one thing I discovered back in 2000, folks, when the market crashed, is that I didn't want to risk overnight. So what I did was, I decided to trade intraday 1 minute charts. And I found that patterns repeat the same way in all time frames. And you'll find them on 1 minute charts, 5 and 15 minute charts, hourly charts, and daily charts, even on weekly charts. So why not day trade, get in, get out, and be in cash every night and look forward to the next day? Here's an interesting chart too. Base breakout, wedge, wedge, another pullback to the channel bottom, and then a run up and a beauty. When we first spotted it at 2 3/4, watch it go to 13.5. And eventually into the low 20s. 10-fold increase. And it took about a year, but still, 1,000% in a year, I'll take it. So that's my point. We're always looking for rising patterns. We're looking for channels. We're looking for the consolidations. Here's a pop wedge, a little flag, and then I went right to my target at 13.25. Tested it again, couldn't get through. When it finally broke out, it was another trade at 13.30 to 14.40. Perfect rising parallel channel. Never broke support. I know it looks like I'm cherry picking. I can tell you folks, I'm not. Every day I have thousands of charts saved. They all look like this, and they're all different. Some examples. In finishing up here, I want to show you some other stuff. examples of swing trades. Here's some of my best picks of the year so far. When Tenneco broke this base and pulled back, I put a swing on it about 13. That was 3-4 weeks ago. Yesterday it reached 22.45 in 3 weeks. If you catch them right, the momentum's right, you could really make a lot of money. But that's a perfect swing for us. Probably my best pick of the year is LEDS. Exploded and pulled back. See how quiet it got near the apex, low volume? So when it started to move at around 8:30, 8:40, we gave it a swing on it. In 2 weeks, it was 31.44. That's what momentum does for you if you're picking them right. Recently picked Fubo. These are just recent picks. I love the fact, well, I see a multiple wave down, and that channel is broken with a gap. And then a flag forms. I went long on this breakout at about 21. And within 2 weeks, it was 31, 50% in about 7 days. That's a good swing right there. My target remains higher, though, at 35. Here's one I just put out recently. I think it's going to rocket. DNLI. Denali. Take a look at this. This is a rocket ship from last March to December. Literally going from 12 to 97. And then this long declining channel. When it broke out and pulled back and tested and didn't break down and started to move, I put a swing on the breakout. It's gone from 55 to 74 in 2 weeks. And to me, I don't think it's going to be a problem to get to 80 or 85. Let's chart. I have people that think this is a $1,000 stock based on some of their drugs. And Funko broke out there. I put a swing on it at about 14. Within a week, it was 24. And now it's consolidating beautifully. I think it goes higher. We'll see. It backed off resistance and it's on support right now. Here's a beauty, PDSB. As soon as I saw this breakout across there, I put a swing on it at 6 3/4. Within 2 weeks, 13.5, a double. And quite frankly, I don't see any reason why this can't be 18 to 24 near term, the way it's moving with momentum. You want to be involved with stocks that have momentum. Another swing, when MCOR broke out here in the 4 range, I had targets at 7 and 9. Well, we didn't quite get to 9, did we? Or did we? Got to 820, backed off, and then we got to 10. This pullback did violate support a little bit right there, but it didn't violate the trend line. Sure enough, rising channel. Semiconductor, look, there's a worldwide shortage of semiconductors. It makes logical sense that some of those are going to be pretty good. The plug was a day trade of mine and a swing trade of mine all the way along. I first spotted it on the breakout in the low single digits. I put a swing on it in the low teens. The stock went from low teens to, was it 90? No, mid 70s, sorry. So, but about a 5-fold increase. Guess what? I just put a new swing on it. It broke out right there. Flag pop, it's pulling back again. But unless the market falls apart, I think plug makes it to 40 again. ONDS is a new one that has just recently failed, but I put it out as a swing trade right there about 7.5, and it made it quickly to 9.5 before backing off. I think some people were stopped out right there. Yeah, I'm not perfect, but I'm pretty good, hopefully. So lots of ideas, folks, on stocks. INOD, PERI, I want to show you INOD. Breaks out there. I put a swing on it at 3.5. It eventually made it to 10, tripling. I love stocks that are symmetrical. Blink was one of my best picks of the year. coming out of this coil. I want to show you. See the large coil? That's where it was a day trade, a swing trade, excuse me. Breaking out above 10, it quickly shot to low 30s and wedged, and then ripped eventually into the mid 60s. I'm watching it carefully now for another entry. Not yet. But that was a previous excellent swing trade. And there's so many others, folks. Some more examples of some of the day trades, and then we'll call it good for today. And I'll take some questions if you have any. But I did want to go over a few more charts on. There's so many. And just I can give you example after example after example. Really an interesting one here. Popped out in the morning, and right at 4, we can see it right there. This is right as the market opens. Formed a beautiful rising flag and broke out. That's where I put a day trade at 18.25. It popped wedged, it popped retested, and this was close to breaking down, but it didn't. And it ran up and wedged again, and then exploded to a high of 20 from where we entered around 18, and then reversed big time on big volume. So that's usually where I get out. I can tell you right now, my theory is that when a stock is running, and suddenly reverses on a high volume bar, I'm out. I don't care where it goes after that. Sometimes it'll stall and go higher, but I don't care. Here's the bottom line. If you're making money, that's fine with me. I want to catch a big chunk in the middle. I don't care about the highs and lows. I want to catch momentum. I want to be able to catch stocks that are trending, stocks that are consolidating, showing bullish trends and bullish patterns like flags, wedges, coils, whatever. A couple more examples. You can see AbbVie started out in the morning with a pop right there, and then from the flag. We didn't buy till there. It then took some time from another flag and popped, and from the wedge, and that went crazy. From where we first got in at 78, it eventually went to 82.5, and then coiled. Again, if the stock doesn't violate support, you should stay in it all day. You really should. There's no point not to make more money. Again, this popped and formed a little falling wedge, broke out, but formed another coil, and then stepped up its way higher, formed the wedge, and then went up from the entry opportunity at 8.75 to 13.25. Very nice trade there. That was a good one for us. It was pretty scary here and there, but it never violated support. It takes guts, folks, to stick with a stock that's backing off like that. So, David, we have about 5 to 7 minutes. I'd like to take some questions. I'm sure there are some. Are you there?
Yeah. Do you see the chat window?
No, I don't.
Oh, if you move your cursor to the top, do you see the Zoom window or the Zoom menu?
Well, I see. Chat. 17 questions. Is that it?
Yeah.
Did you catch AMC when it went to 480? Only in the beginning. I really stayed away from. AMC was a day trade for us for the most part. I never caught it. Oh, you don't mean AMC. You mean GME. I'm pretty sure. Okay, hang on a sec. I got a question here on GLTO, and that was the stock we did trade today. Let me get to that. Oops, I just deleted it. Sorry. Let me bring up my charts 1 second. Okay, on GLTO, the question is, did I chase this? The answer is, I told my people in no uncertain terms, I don't want to be involved with these stocks. Now, did I miss a big move? Yeah, but I also told everybody, not just GLTO. What was the other one that just got crushed? ORPH. Look at this. A lot of us were in there this morning because I spotted it at 8, 9, 10. And I said, if it breaks out above 13, it could fly, but I didn't want to participate. Why? I don't like halt. Because one day it's going to do this. Breakdown, halt, crushed. This is 20 points, folks. You want to be in a stock that the gap's down 21 points? No, I don't either. And that's why if a stock acts like this, I warn everybody, you can trade it, but you get better and take your scalp and be happy with it. GLTO is the same thing. Halt, halt, halt all the way up and then collapse. So when do you know when it's going to collapse? No, but the first reversal bar is usually an example of getting out. And that's why it was halted so long, because everybody head for the exits right there. It was halted and it gapped down from 13 to 10, and then it got slammed to 6 and change. So the answer is no, I didn't trade it. What criteria do I propose for us to choose some of the alerts since our account? Yeah, you have to know who you are. That's my answer. In other words, are you comfortable with lower price stocks, higher price stocks, medium-sized stocks, or very liquid stocks? Because I don't like illiquid stocks. That's what happens to them, what you see on your screen. Okay, AXLA, perfect. It's a really good question. How did I know when it started moving 11:30? Where I was watching the chart all the time? No, I look for pops. And when I hear, if it isn't me, it's someone in my room. That's the beauty of my room. I got tons of professional traders with me, and they all spot things moving. Some people are just watching the percent gainers. They're watching the poppers. When this thing popped in 1 minute, 42 cents, and then coiled, I was watching it. When it broke out, that's where I gave the alert. No, actually, I gave the alert before it broke out, thinking that first pop and pull back and coil, it was a perfect coil, and I wanted to be in long. So I told everybody about 365 to buy it. 1, 2, 3 hours later, it was $6 almost. And that's basically 60, 70% move. How do I stay on top of so many charts? Yeah, I'm pretty what I would call multitask oriented. I just scroll, nonstop scroll. I will do this all day. And I'll stop at a pattern I like and then go on and see something that's developing. I might say a wedge or a coil for me. Like, for example, in the middle of the day, I would look at digital brands, and I saw this too, by the way. And I said, there's a bull coil forming on it. If it pops with volume, it may go. I didn't do anything until it broke out and pulled back. I told everybody this pullback may be a buy opportunity. Went from 376 to 446, 70 cents, and it didn't take 15 minutes. My book is called Profitable Day and Swing Trading. You can get it. Actually, right now, I think it's out of print because it's been 5-6 years since I wrote it. But we're getting the publishing rights from Wiley, and it will be available at TheTechTrader.com, both in digital form as well as paperback. The title of the John Boyk book is Monster Stocks. Again, I just want everybody to understand that the way to get to me is to simply go here. www.thetechtrader.com. Here's my site. Log in or sign up. In my case, here's your trading room. It's chock full of people giving ideas and making comments and talking about and asking me questions and looking for breakouts. And it's like, I got to tell you something. You'll get hooked when you're in this room because people have been with me for 15 and 20 years, some of them. And I can tell you that it's a really friendly place. Anytime I see someone who's got an attitude or is derogatory or anything like that, they get one warning and they're gone. If they don't change their minds or attitudes, I don't want them in the room. It's a friendly place. People like to mentor. If you're a newbie, welcome aboard. Here's my brand new pricing structure as of last week. This is a new site as well. These are our products. All access for the Tech Trader. It's $2.99 a month, but we have a special right now for $2.39. Okay, it's the introductory offer is ending August 1st, but 60 days from now, the price will go back to $2.99. But for $300 a month, it's $10 a day or whatever it is a day. We're looking at $1.50 an hour. It's like a joke. Okay, but what you get is my day trade alerts, my swing trade alerts, short-term trades, mentoring, access to the trading room, ideas, commentary from hundreds of traders, live online webinars, access to my real-time analysis, and access directly to me. You can ask me a question anytime. Charts of the day, weekend webinars, or you can just go to the Tech Trader short swing service, which gives you swing alerts on shorts and a weekend webinar for a short service. Same on this long side. If you don't want to be in a room, you just want to do swing service long, you want to have access to the room. And I got to tell you right now, that's where the action is. That's where you find your ideas. It's a no-brainer, folks. For another $40, join us at thetechtrader.com. And again, it's free for 2 weeks or 10 days now. And feel free to contact us at thetechtrader.com, and we'll be glad to assist you. That's it for the presentation today. Thank you for being here.